Welcome back to the Systematic Pro Trading Desk. This is the weekly report for the week ending 13th of February, 2026. As always, the goal here isn't hype or cherry picking. It's to look at how the portfolio of systems behaved, what actually made money, what didn't, and what that tells us about current market conditions. For the week ending on February 13th, 2026, the portfolio finished up $3,187. 13 overall. The main contributor was QGrid Elite on the 15-second Renko setup, which delivered plus $4. 173, 90 on 25 wins and 16 losses. That was clearly the core engine of performance this week. We also had a very strong contribution from 3-minute M2K Qzeus V1 to a intermediate, which finished up $940 with 6 wins and 0 losses. That's a great example of a system lining up well with the market regime we had this week. Qsumo on the 10-second R5 setup added another plus $571. 50 with a perfectly balanced 7 wins and 7 losses, which tells you it was more of a choppy rotational contributor rather than a trend-dominated one. What's interesting this week is the divergence between instruments and time frames. While QGrid Elite and M2K Qzeus performed very well, several of the MNQ's variants struggled, particularly on the 5-minute and 30-second aggressive configurations. The biggest detractor was 5-minute MNQ Qzeus V1 to a intermediate, down $1,296, followed by the 30-second MNQ Qzeus aggressive at minus $775. And the 7-minute MNQ Qzeus intermediate at around minus $398. That tells me the Nasdaq microstructure this week was not friendly to those specific Qzeus variants, especially the faster or more aggressive ones, while the QGrid style structure and the M2K environment were much more cooperative. The big positive is that QGrid Elite did exactly what it's designed to do. It participated in structure, handled rotations well, and produced a steady stream of trades with controlled losses and clustered winners. M2K Qzeus also had a very clean week, which suggests that small cap index structure was more orderly than Nasdaq in this particular window. This is exactly why I run a portfolio of systems and instruments instead of betting everything on one market or one time frame. On the other side, the MNQ's variants clearly struggled in this regime. The losses aren't catastrophic, but they are persistent across multiple configurations, which is a signal I pay attention to. That doesn't mean I rush to turn them off or start tweaking parameters. It means I log the behavior, watch for continuation or mean reversion in performance, and let the data build. The real takeaway from this week is simple. The portfolio approach worked. Some systems performed very well, some underperformed. And the net result is still a solid green week. That's exactly what you want from a diversified, rules-based trading stack. I'm not trying to make every line item green every week. I'm trying to make sure the overall behavior stays stable, scalable, and survivable across market conditions. Going into next week, the plan is unchanged. Keep the same configurations. Keep collecting forward data. Keep focusing on behavior and risk. Not just PL. If the Nasdaq regime shifts again, we'll see whether those MNQ variants recover or whether QGrid and M2K continue to carry more of the load. If you find these process-driven weekly reports useful, make sure you're subscribed to the channel. I'll keep posting these portfolio breakdowns and system behavior reviews as the data builds. And if you want me to drill into a specific system or market in more detail, drop a comment below. Thanks for watching, and I'll see you in the next report.